Hello everyone, welcome to the Ichimoku.co daily FX market review for the trading day ending Wednesday, June 17th. Firstly to the Euro US dollar, and here we see buying coming into the market for today's trading. This second last candle on the chart is one that has finalised trading. A fairly large white body candle suggesting that the buyers have found some upside momentum as opposed to a small amount that the sellers found for the previous day's trading. For the fourth consecutive trading day, we've seen the market bounce off the Tenkan indicator holding as support. Suggests that it should continue to do so if the market does trade down to that level. The bounce off this area today has been quite strong, and we've seen the buyers close with control and importantly close above the 112.89 level of previous resistance. And we see the last three candles where the market was unable to breach that area today, breaching it in a bullish manner, suggests that we certainly could see continued upside in the Euro US dollar. Now if you look closely, we see that we have a pattern that's formed. It's something of a wedge type pattern. The pattern is quite large compared to the trend leading into it, so not working out to be quite good. What I'd prefer to see would be a more significant trend leading into that pattern, but still the important thing is that we have this congestion area, we have the convergence of the peaks and troughs within the congestion. With this being an upsloping wedge, it normally is a correction pattern, so it's more likely that we could see a breakout and a close down below the lower barrier and the market correct to the downside. But with all patterns, the proof of the pudding is in the eating, so to say. What we have to wait for is the breakout, and that is the final thing that decides whether the pattern is going to be continuation or a reversal. And what we're likely to see here, I think, with the market building some solid momentum inside this pattern, and with us seeing some buying in this new candle as it's developing, is perhaps a breach to the upside. Now the problem is going to be that even if we can breach the upper barrier here, we do have strong resistance at 114.59. And we can see that the last time the market tested to that level, we saw some strong selling coming in, where the market corrected back down to 109.02. So that's going to be a very, very important level. So whether we do breach that area is debatable. You can see here previously back in early February where the market tested to that level and sold off quite strongly, even down to 104. So a very, very important level. Now the important thing here, however, is that we do still have a bullish market in all three time frames. We're trading above the cloud, the Kijun-sen, the pink line, and the Tenkan-sen. Unfortunately, the Chiker span is not supporting that positive price action in all three time frames, and it suggests that momentum is a little bit up and down at the moment in that medium term time frame, so not supporting a breakout to the upside. So we do have to be quite careful even if we do see the market test above the upper barrier. But really I think the important breakout that we could see, if we do see it to the upside, would be the close up above the 114.59 previous resistance level, and what we'd like to see is a strong bullish close up above there, and if we see that, we could quickly see the market trading up to 116. Now any breach to the downside and a bearish close down below the lower barrier would be completion of this wedge pattern, and then we could then see the market trading down through to around this 109 level. But look at the support that we have down below. We have 111.60 support, we have the Kijun-sen trading at 111.42, and then the cloud extending almost down to 109.02. So if this is a correction pattern, a reversal pattern, then not a lot of faith in us meeting the target based on any breakout to the downside. Just having a quick look at the Fibonacci extension, and here we see for today's trading as it's closed, the market trading to the 61.8% level, and we have done that in a bullish manner. So on that current candle it has finished trading. There's no hint here that we are going to see a correction, so it suggests that if we are strong enough, the buyers are strong enough to breach through the 61.8% level, if we can breach through that previous swing high, then there's a good opportunity for the buyers to trade up to the 100% level around 114.86, which coincides with that major previous swing high about the 114.66 area. Next, moving to the hourly charts with the Euro US dollar, and here we've seen the market oscillating above and below the Ichimoku cloud for the last few trading days, so quite some indecision in this market. But for today's trading, in that last couple of hours, we saw a strong bullish breakout up above the first pivot point resistance level. We didn't see any strong follow through after that, so it suggests that the buyers might not be as strong as we'd like them to be. But in the last couple of hours here, we've seen some good buying come in, and then a weak indecisive spinning top type candle develop in that last hour. We do have a something of a tweezer's top pattern here, and we'll be looking for confirmation. It suggests that we could see a trend in that first time frame develop to the downside. Now, if we do see the trend develop to the downside, looking to strong support at the middle pivot point level at 113, and if we breach through that area, looking to strong support at the Tenkan-sen at 112.91. But if the buyers do come back into the euro US dollar on the hourly chart strongly, we're looking to resistance at the first pivot point resistance level at 113.92. Moving next to the US dollar Japanese yen. And the second last candle on the chart here is the one we're analysing, this one with the very large spike here, the large shadow on the top. And if we look at the last few trading days, very, very weak indecisive trading over the last week for the US dollar Japanese yen. I've highlighted this zone, this rectangular zone in orange, where we saw the market probing into as we saw this strong rally trade through 124.70, and prior to that we saw the shadows testing to within this region, and that region was holding a strong support, and then we saw the market bounce off there only to see selling coming in. Now, as the market is trading up from the Kijun-sen support at 122.35, we're seeing that area hold as resistance. So here's a good example of how support and resistance can change character, and how support and resistance acts in a zone. And we've tested up through the Tenkan-sen indicator today, trading at 124.05, almost up to the 124.70 level, but the sellers have taken back control. The buyers have lost commitment above those areas, with the market unable to breach through that area. So that is a very, very significant region of resistance for the US dollar Japanese yen. Now, the test here is going to be whether the buyers are going to close in a bullish manner up above there, and I suggest that if we do see eventually a strong bullish close up above there, we could eventually see the US dollar Japanese yen trading to 124.70, or even back up to this swing high at 125.85. But any strong selling coming into this market on the next candle could quickly see US dollar Japanese yen trading down to the Kijun-sen indicator at 122.35, but we could see some strong support coming in either there or at the 122 level of previous resistance. Looking next to the hourly charts with the US dollar Japanese yen, and here we see this weak indecisive trading over the last couple of days, up through the cloud, down through the cloud, testing almost through, and then finding resistance and support within the cloud. And for today though, we saw the market break out in a strong bullish manner, testing to the first pivot point resistance level through their bullish lead, then to the second, and then to the third to hold as resistance. In that the last couple of hours of trading today, a strong bearish breakout, and then the market attempting to rally through the cloud for the beginning of the new session, finding some resistance very close to the middle pivot point level at 123.68, and then in the last couple of hours of trading, selling out through the Ichimoku cloud, a very thin amount of Ichimoku cloud. So now we have a bearish market in all three time frames, and this current hour is seeing some strong negativity in the US dollar Japanese yen, some strong selling coming into the market with another black body candle, sellers in control. There is an opportunity here for the sellers to trade down through to the first pivot point support level at 122.92, and then even perhaps down to the second at 122.44. Next to the Aussie dollar, US dollar, and here we see this market trading within a congestion area. And excuse me, as we saw with the previous market, and that was the euro US dollar. And for today's trading, this second last candle on the chart, we saw a market with a large shadow on the bottom, a very small black body candle at the top of the shadow, and it broke out down below the small pattern that had formed, something of a symmetrical triangle pennant pattern, probably a little bit too large to be a pennant pattern. This now, with the market failing to close down below the bottom barrier of that pattern, suggests that the pattern hasn't been completed. It gives us an opportunity to change now that bottom barrier, so I'll do that now, and we have the bottom barrier down a little bit lower. The upper barrier remains at the same level and is held as a resistance for today's trading. This candle today has seen a new downtrend form in the first term time frame, but certainly not on a bearish candle. A candle where the sellers lost commitment down below the Tenkan-sen support at 76.96 and down below the 76.72 level of support that has been important support in the immediate recent past, and then prior to that for some time. Any potential breakout to the upside is likely to find strong resistance at the 78-cent level, a previous important area, and then we have strong resistance through the cloud and the Kijun-sen indicator extending up to around 79.17. Any breakout to the downside, and for completion of this pattern we'd like to see a bearish close down below the bottom barrier. Any breach down below could see very strong support coming in at this highlighted zone of support, extending down through to almost to the 75-cent level. So a market where we have very strong resistance overhead, very strong support down below. This is not going to be a good trading market until we see either a strong decisive breakout to the upside, and certainly breaking out in a bullish manner above 80 cents, or a strong negative breakout down below 75 cents. Looking at the hourly chart on the Aussie dollar US dollar, and as we saw previously, slightly more bullish trading over the last couple of days above the Ichimoku cloud. For today's session, the market opening around the middle pivot point level, finding resistance at the top of the cloud, and then breaching down through the bottom of the cloud, giving us a bearish market in all three time frames. That breakout didn't see any strong bearish follow through, with the first pivot point support level holding, and then throughout the trading day the market then breaching down to the third pivot point support level. And I think this shows how important the pivot point levels can be, with the buyers coming in solidly off tweezer's bottom, and in fact that tweezer's bottom held on multiple occasions on indecisive trading, with the buyers coming into the market strongly to trade up to the top of the Ichimoku cloud, and that area then once again holding as resistance. For the new session, as the market's opened, we've seen the top of the cloud hold as resistance, strong selling down through the bottom of the cloud, giving us a bullish market in the longer term time frame, but the area around the middle pivot point level, trading at 77.18, holding as very strong support. At the moment, in this new candle, in this last hour that is developing, we are seeing the market change trend, but the bottom of the cloud now holding as resistance once again. So important areas are going to be the Ichimoku cloud. And if the buyers are strong enough over the next few hours, there is an opportunity for them to breach through the top of the cloud, because the cloud is very weak, it's very thin, and the opportunity is there. If we see a strong bullish breakout and then strong follow through above the cloud, we could quickly see the Aussie dollar trading to the first pivot point resistance level at 77.95. But any selling coming in and a breach below the middle pivot point level and then through the Tenkan-sen at 77 could see the market trading down to the first pivot point support level at 76.68.